Like it or not, when the Fed speaks, markets move, and silver is no exception. That's right, it had a very good day today, but the question is how long will this last? You might not like the answer I'm going to give, but let's talk about it all in this video as we explore. That's right, the markets have been shaken today by what Jerome Powell has said in his last speech from a meeting like this that he will ever give as chairman of the Federal Reserve. Yes, indeed, this is the last big meeting, and he has made waves across the markets for sure, all across the markets. And we're going to get into that. Before we do that, I want to remind you of channel sponsor, Summit Metals. I want to thank them for sponsoring the channel. Check them out for excellent customer service and fast shipping. SummitMetals.com. Now, I'm going to be referencing an article here from Adrian Ash that surmises some of what's going on, and I'm going to also talk about what my thoughts are on it as well, as we see gold prices have surged more than 1% today, as the Federal Reserve Chair Jerome Powell indicated a rate cut next month in what was almost certainty his last keynote address at the Jackson Hole Economic Conference. Powell said shifting economic risk have sharpened the case for a Federal Reserve rate cut, warning that the labor market was cooling and Donald Trump's tariffs were lifting inflation. That's right. It's lifting, in other words, he's conflating tariffs with inflation, which should not. He knows better to do that, but of course, it's a shot at Donald Trump. And of course, it's also a shot at sound and economics as well, too, and basic knowledge about what inflation is and what tariffs are. Powell shows a whole lot more dovish signaling than investors expected, according to Nikki Shields, head of metal strategy at Swiss Refining and Finance Group at MKS PAMP. The dollar index, a measure of the currency's value versus its major peers, fell 0.8% to a 5-session low immediately after the speech, with 10-year Treasury yields, benchmark rate for government, as well as many finance and commercial borrowing costs, fell 5 basis points to a 1-week low. Yes, indeed, and that is going to make things more attractive for a non-yielding bullion out there. Yes, the dollar index now has fallen pretty dramatically. It's now down to 97.74. A stark contrast from what we've seen yesterday when the dollar index was up. But guess what? Yesterday, silver was up as well. So let's talk about what the metals prices are doing right now at this moment before the close of the markets, which they will be closing very soon here. And for the weekend, gold is up 1%, 1.05%, up $35.10 today, rocketing up to $3,374.40, far above that range of $3,333, which we've been seeing fairly regularly here. Silver, though, is up just right under 2% right now, but it's been trading above $39 for quite a while here today, but it is at $38.95 in the ask price. It did get up as high as $39.13. So it, in terms of that is concerned, it was up even to the bid price above $39. So there's a lot of resistance at 39. It does not want to get there and stay there, it looks like. So we may see it close below $39 today. But I did a poll on my Sunday Night Market Watch, and I do this every Sunday night, and I hope you will join me for one. They're a lot of fun as we watch the markets move. And silver, I asked the question in the poll, will we see silver close above $38 by the end of the week, by Friday? And a majority said yes. And they were very smart to say that, because it indeed will close above $38 in moments here. So that's pretty exciting. In fact, we're very close to $39. If we can hold the 39, well, 40 is around the corner. But you know what? That's still a pretty big stretch, because there's a lot of resistance. And that's why I don't know that this is going to last. And obviously right now, moments before the markets close, we may not see it last above $39. But there's another reason too. I'm going to talk about that later in the video, why I don't think it's going to last, at least in the short term. Now, I'm not talking about the medium term, because the medium term for me means between now and the end of the year. But for the short term, I don't see this lasting a whole lot. Let's see here. Now, the major U.S. stock indexes rose over 1%, with the S&P 500 gaining 1.3% and halting a 5-day slide, while the NASDAQ Composite and Dow Jones Industrial Average surged as much as 1.6%. So the Dow Jones, everything is doing good except for Cracker Barrel stock. Now, seeing spot gold jump up, and we're seeing it move up to this area where we're flirting with potential $3,400 gold again. That's pretty amazing. Now, the odds of a September rate cut by the Federal Reserve also has jumped, according to the Fed Watch tool. Tracked it up again, and yesterday it was around 76%. Now it's at 85.2%, and that they're going to cut a rate by a quarter point, with 14.8% saying that they will leave rates unchanged. It's still a very high number, and actually I may have got that wrong. I think it was 82 or something before, but now we're solidifying it. And the metrics have not changed a whole lot, but really it's about the signals that Powell says. People hang on every word that the chairman of the Federal Reserve says. No question about that. And that has been the case, and I've talked about that going back to Janet Yellen and even Ben Bernanke. The markets are very much swayed by what the Fed does and says. Maybe even more so what they say than what they do, anticipating what they do. It's all psychology, folks. That's what's moving the markets today. And for all intents and purposes, there's no reason why gold and silver should have risen as much as they have today. But when you look about what the dollar's reaction to and the bond yield's reaction, well, that's when people move into the safe haven assets. And so the buyers come in, and that's exactly what's happening with gold and silver today. Silver especially. It is the winner of the day by far. And it has narrowed the gold to silver ratio now down to 86.82, which is a number we've not seen in a little while. So that's pretty encouraging, even though it's still very, very high, and no question about that. This is pretty amazing. The stability of the unemployment rate and other labor market forces measures allow us to proceed carefully as we consider changes to our policy stance, Powell said in remarks prepared for the Fed's annual conference on Friday. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risk may warrant adjusting our policy stance, which means that they're going to lower rates. Now, according to a report by the U.S. Department of Labor that was released on Thursday, the number of Americans filing new applications for jobless benefits rose by the most in about 3 months last week, while the number of people collecting unemployment relief in the prior week climbed to its highest level in nearly 4 years. Now, of course, these statisticians, they may or may not be right on that. I don't want to rule out the possibility that they could be right. But remember, the chefs at the Cook the Books Club, they're in effect, and they like to cook those numbers, and that very well could be a part of that. And remember, some of those job losses are from government when we're trying to trim back government. So we have to look and parse that data and remember where there's other areas where jobs are needed. And that followed the shock weakness in the July U.S. jobs numbers, the PPI numbers, the shock jobs data, which angered President Trump, who fired the Commissioner of Labor Statistics and called for a resignation of stubborn moron Powell. Fed Bank of Kansas President Jeff Schmid, a voting member of the FOMC in 2025, said on Thursday that he thinks inflation risks are marginally higher than risks to the labor market, though monetary policy is a good place as policymakers consider an interest rate adjustment next month. And remember, that's still almost a month away right now. It's September 17th. That's a long way away from now. And we're getting all this reaction, early reaction. But again, we've seen this before, and I've said in a rather controversial statement in a prior video that may not be a good thing, and this may not be a good thing either. This big, large reaction, this big move in silver's price. That's why I don't think it's going to last in the short term. Essentially, it's kind of like a steroid injection or a shot of hit of sugar, sugar rush, and it comes crashing down. Now, I'm not saying that silver's going to crash, but I think in the short term we could see it probably fall back, maybe even to the low $38 range or high $37 range. That is quite possible. And it would not surprise me one bit if that occurred, which means that maybe it's a good time to wait to make a purchase of any silver or gold right now. That's right. Even though I'm sponsored by Summit Metals, a bullion dealer, I'm telling you this may be a good time to wait rather than buy, as anytime there's a big spike like this, to 2% or more in a day, which is a big spike, no question about it. Well, it may be time to take a step back and really evaluate whether or not you want to make a purchase or not. Now, of course, there's risk involved in that too, because it could continue to climb up even higher. I could be dead wrong. We could see silver's price shoot up another 2% on Monday and Tuesday. I kind of doubt it. We have the whole weekend to digest this. And again, I do a market watch every Sunday night, and it'll be very interesting to see what happens, as there's been no smackdown today, obviously, like we usually get on a Friday. It'll be very interesting to see what the Asian markets do and how they react to what happened on Friday here, on Sunday. So join me here this Sunday at 6 p.m. Eastern Time as we watch the markets and what they're going to be doing and how they react to what happened today here and with Powell's speech. So as you get closer to the optimal dual mandate numbers, maximum employment and stable prices, it actually becomes more difficult to make decisions on the margins relative to where policy rates should go, according to Schmid. The FOMC minutes for July, when members held the policy rate for the fifth straight meeting, were published on Wednesday and showed that most Fed officials highlighted inflation risk as outweighing concerns over the labor market. But remember, what causes inflation? It is the federal government spending money and having to print that money to meet those spending needs. The Fed does that. That is not a tax thing. And tariffs are taxes. No matter how you slice it, tariffs are taxes. And those are not inflationary in and of themselves. They can cause prices to go up, but that's not inflation. More and more people need to understand that. And that is a difference. But anyways, so we'll see how this plays out. That's where that's your market report for today. Let me know what your thoughts are in the comment section down below. If you enjoy what I do here by providing you the latest news and information and analysis in the world of precious metals, hope you will consider subscribing to the channel and pressing that notifications bell down below. So that being said, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.